Yes. Let's turn this down. Always remember, whatever you think about comes about. Whatever you focus on grows. Switch these back to Sunday mornings for a bit. Gets hard being motivating at night at times. Let's see. Turn this down. I had to get another phone so I could see comments. Welcome to Sunday service, where we try to break down the basics of the money flow, man. Of this thing this chaotic thing of price movement. Price moves in chaos. Or what appears to be chaos. Every day of ups and downs and what appears at times to make no sense. You know, companies can report earnings and they'll be great and the stock sells off. They'll report earnings, they'll be horrible and the stock goes up. And then sometimes one minute COVID is a big deal and stocks get smashed. Next day COVID doesn't seem to matter and stocks go up. And so it can appear to be this utter randomness, and there is from day to day. From day to day to day to day to day to day is utter just randomness. It's just nonsense. It's just price up and down, up and down. And a lot of that comes from this idea that of fear and greed is at its root. And that's what really moves stocks. That's what really moves housing prices. And if I want to show you, you'll see this. This is the Dow Jones Industrial. And the tickers don't matter on Sundays. It's just the basic concept. So if you put a ticker in, I will literally block you. Nobody gives a shit about your stock right now. That is not the purpose of this. And as I watched this over the years, and I began to see and try different strategies and, options and Forex and, futures and commodities and, growth stocks and penny stocks and biotech stocks and REITs and MLPs and ETFs and ETNs and mutual funds and bonds and all these things, All these things are happening every day in the stock market. And every day there's an article and a news and a newsletter and some guy on YouTube and some guy on Instagram and some guru and some this. And there's all this shit is coming at you at CNBC and Fox News and Bloomberg and Reddit and Twitter, stock twits, and all this stuff is coming at you. And all these are just opinions of people who actually have no fucking idea what is going to happen. None. So now you mix that. You take this mixture of people, and it's no different in crypto. You got from YouTubers to Michael Saylors to the news to the government to Biden. None of them know shit. They have no idea where anything is going. And the more certain people are, the more delusional they are. They have no idea. None. And once you can say that out loud, you free yourself. And that gives you power. And I began to watch and see how price would move. And that journey took me a long time, man. It took me about 7 years and losing a lot of money. And then I began to notice that this green line here you see is called the 20-day simple moving average. And that, at the time, I didn't know it, but that became at the core of what I was trying to, where I would ultimately get to. And it's this idea that this stock market, all markets for that matter, are fractal. They're fractal in nature, meaning that in today's world, and this is the big, the Gutenberg printing press freed people in religion. And it spread about information and ideas because now we could print it and we could freely deliver it and it began to spread. Well, the internet did the same thing for stocks and for investing. And as we've progressed as a people, it's gotten easier and easier and easier and easier. And because it's so easy, it's also easy to be completely stupid and to do the dumbest things possible or not. And the lure, you say, why would anyone willingly choose be stupid? Like, why ram your head into a wall? And it's because that's logic isn't what moves the market. See, if everyone was logical, this shit would just stay flatlined. If everyone was logical, AT&T would trade for $34 every day. Because that's the price. That's the value of the company. But that's not how it works. And so what I figured out, what moves markets is people's reactions, emotions, and fear and greed. As prices move down, and then they'll stop. And you have this swing from logic to unlogic. And then prices will run up. And they'll get to where they've kind of gone too far. And then they'll stop and they'll start to go sideways. And what people will do with their emotions, they begin to look for confirming belief systems. You're like, well, I really like Delta, so let me go see if I can find some articles that confirm that I like Delta. That's what people tend to do. And if you're filled with fear, you'll find articles to deal with fear. And you'll look for confirming information. That's what people tend to do. They always want to look for information that proves they're right. And so if you're a conservative, you listen to conservative news. And if you're a liberal, you listen to liberal news because, of course, you're right. And so you want to be around people who agree with you. Why would you want to be around people who are wrong, right? Price is very similar, and people interpret the stock market very similar. Now, this is the Dow Jones. So I wrote this book 7-8 years ago, and I didn't know today the Dow Jones would do the pattern of moving sideways, going up, moving sideways, going down, moving sideways, going up. And yet it does it. And there's Spotify. And the tickers don't matter. It's the process, right? And so as I began this study of the stock market, after losing and losing and losing and losing and losing, and I began to want to try to make sense and order. I mean, I don't give a fuck about your tickers or the stocks that you own. None of that mattered to me. I want to know, why does the market move the way it moves? Not what stock to pick. That's not the question. The question isn't what stock should I buy. It's how should I buy, when should I buy, and why am I buying? And once you can answer that, then you can buy stocks anywhere, at any time, in any place. Same on real estate, right? It's why. What type are you buying? When? What's the reason? So once you figure that out, then you can buy it all the time. You can buy it all the time. And so what I began to see is there were certain patterns that repeated. And that one of the things that I figured out was nothing is certain, but where prices tend to stop in the past, as you see prices stop, meaning when they say stop means they put in a low and they confirm the low. And each one of these little lines you're seeing, these are 1 day. Each one of these things is 1 day, right? And they stack up. And any one given 1 day means nothing. Means absolutely nothing. But as we stack them, 1, 2, 3, 4, 5, what do we see there? Well, inside of the conflux of, hold on, let's take this down. Inside of here, right, what do we have? 5 days. Now, 5 days makes a difference. Why? Because 5 days is a week. That's a week of trading. That's 1 week of a person's life. Now, if you were a day trader, inside of these 5 days could be a lot of excitement. You could have moved in and out and did this and that, in and out, in and out, in and out. And he's, losing his mind every day looking at these 5-minute charts in and out. And that may be your thing. And if you're with me, this took 30 seconds. That's it. Why? Because that didn't do anything. See, so the way that I trade using day charts, that's nothing. Nothing happened. But if we were to drop down inside of this and get the time frame smaller and smaller and smaller and smaller, what looks like a move from here to here on that time frame will look like a move from down here and way up here and down here and way up here. Why? Because why? The time frame changed. And so we can't bring any order to chaos if we can't define our time frame. And so one of the things that I began to figure out was I needed to figure out repeatable patterns that I could see. They didn't have to happen with certainty, but I needed to see these patterns. And once I could identify them, then I could create a set of rules for myself. That they're not perfect and they don't have to be perfect. And they're not about prediction. They're just about the possibility of repetition. That as things repeat over and over and over, I could use that to my advantage. or at least to bring order to chaos. And that's what you're seeing here. This is, as you look at this is just Spotify. And as you look at this, you begin to see this pattern as we draw the tops and the bottoms, and you'll begin to see this pattern emerge of price moving, and we could keep it simple like this right now. But if you look, that's what the money flow is, except at the tops and bottoms, instead of being drawn, like a pyramid, so to speak, what I began to see is that you sometimes it'll just run straight up and run straight down, but that's not the common. What I began to see, the common is that price would top out, it would bottom out, and the bottoms would look the same. Every bottom would look the same, and every top would look the same. And so all I had to do was look for the same. And it's a pattern, same in real estate, meaning if I'm looking for the same type of house. Why? Because it simplifies it. It turns chaos into cash, so to speak. Because now I can begin to, make rules for myself, or at least a plan or a pattern. And that I can stick with because I created those rules. And as price would, as I began to look for these repeatable patterns, it was different people that came into my life that showed me these things. And I don't remember who first showed me about support and resistance. And that stuff isn't that difficult to understand. And a lot of people use different illustrations to try to illustrate it. They'll use like a bouncing ball. If you were to bounce a ball and it hits it, the roof, it's going to come back down. If it hits the floor, it's going to bounce back up. That's a pretty easy illustration to understand, and there's a lot of ways to explain that, but it's just where price, if it stopped there before, stops again, you start to build what they call resistance, meaning every time price hits that, it comes down. And then same on the bottom, you begin to build where when price comes down, it bounces off of it, right? And you begin to draw those out. Well, that's more art than science, meaning it's art. So what does that mean? It means it takes time. Music is art. It takes time through repetition. So as you begin watching charts, you'll begin to see it. Well, and what I learned is inside of support and resistance were the boxes. Boxes take time to see, and sometimes they're super obvious. And the more and more you do it, the more and more boxes you begin to see. And the boxes that I discovered would almost always be a box at the top, and there would almost always be a box at the bottom. Top and bottoms, right? And that began to make sense of that, because you can't just say top and just say bottom. That doesn't make sense. We got to have so we begin to use these phrases, stages, stage 1, stage 2, stage 3, stage 4. Other people call them different things. They could call it a zone of accumulation, an uptrend or a breakout, a markup. These just become the terminology, the lingo. And as you learn and master anything, you have to learn the lingo, right? And if you trade with me inside the Money Flow Gang and I say a breakout, you should instantly go, oh, price is breaking out above the 20-day moving average, probably breaking out of a box in a stage 1. And we know a box is just a zone of accumulation where we got a fractal pattern of 5 days that stood still. That's what this is, and guess what? That's going to take you a minute. It's going to take you a minute to get, to see these clearly. And after a while, you don't even need the lines or the moving averages or the indicators. You don't need them anymore because you can see them because you're in flow. You're in the money flow. You can see the flow. You see what happens. And then even inside of all of this, which is a lot of information that I just said, it's like years of training and studying and looking at charts. There's little nuances of boxes being broken and then price coming back into the box, right? Of clear tops where a box is put in at the top and price breaks above it and then comes back down, right? The opposite of coming back in the box, it comes back in the box the wrong direction, right? So whatever, it's a yin and yang thing, right? Good and bad, high tide, low tide, good and evil. And you're going to see that in the market. The stage 1 is the stage 3, man. They're one and the same. The only difference is the direction in which the last stage just came from. It ain't no more complicated than that. The 3 is the 1. The 3 is the 1. So once you understand the stage 1, you understand the stage 3. Except instead of calling it accumulation, the only reason they call it accumulation is the price stops dropping. And that because due to people, more accumulation, meaning more shares are being bought than sold. Now that's not the best way, but that's the simplest way to describe it, meaning there's more buying pressure than selling pressure. So for every house sold, there's a buyer. And if you get a lot of buyers and they're willing to pay more than the last buyer, you get a breakout. That's it. It doesn't have to be based on any logic. And often when I meet new traders, the first thing they ask me is, why is it happening? I say, I don't give a fuck. It doesn't matter. So if you know the answer, does that change something? Does it make the breakout more important or less important because you know an answer? And even that answer is made up. It's still just fear and greed. And you could say, well, CNBC says it's because this and that. They don't know. You really think a cumulative effort of everyone interpreted the exact same data that way and they seem to, come on, man. They don't know. They have to find a reason. And so sometimes you'll see the Dow plunge. Did it plunge? Is that what it did? Who defined the word plunge? What does that mean? Is that 2.3%? Is a plunge 2%? You notice they use these verbs, these action words. Why? It's trying to get you to take action. They're trying to get you to respond. That's what they're trying to do, man. Plummeted. It plummeted. Have you ever seen the definition of the word plummet in a trading book? I've never defined it. I don't even know what that means. Right? But apparently CNBC knows what it means. For me, it just looked like a 2% drop in a stage 2. So you see how you can begin to add order to the chaos. And I don't have to use their terms. And they say, well, markets are going down, or it's a stage 4 correction. That could be. And that's just the normal movement of price. Well, the market's going down. Good. That's what healthy markets do. They go sideways, they go up, they go sideways, they go down. If they never come down, how do we ever get a chance to buy shit cheap? And so a lot of times I hear people say they'd love to buy real estate, but it's too expensive. Yeah, but then why do you get mad when your stocks go on sale? I don't understand. Does it not apply to the stock market the same way you'd want it to apply to the real estate market, or is it somehow different in your mind? Imagine if houses change prices as much as they do in the stock market. It would be chaos, right? It says, I am not affiliated with GP. You should be affiliated with me, man. What's wrong with you? Gang, gang. You should be affiliated. In the highest sense of the word, as in we should be friends. Let's see. So as you're looking at this, and as I look at stock charts, and I'd been trading about 7 years. I'm going to say I was closing in on 40 years old. And I'd been to, I don't know how many seminars. We used to go to hotel rooms and they'd have these these meetings like you see for conventions and shit now, except it was to talk about stocks. And they'd show you charts on the walls and all this fucking shit. And a guy who doesn't even trade would stand up there and try to teach you shit that he doesn't know. And it was always a scam, man. It was always a guy. It was like, really, you're a trader? And that's why you go from town to town to town because you're such a good trader? Fuck out of here. So what he's teaching is something someone taught him. He's just a professional speaker. So he stands up and talks, much like you see today with entertainers on YouTube and this and that. They're just fucking entertainers, man. Now, they might know a little bit about their subject matter, but it's no different than watching CNBC or Fox Business. Very few of them are actually in the business. Very few of the gurus and the Instagrammers and the YouTubes actually put in the work of the shit they're teaching you on a day-to-day basis. I can tell by the way they talk. Accumulation stage moves sideways. Prices move sideways. And as I began to study support and resistance and I'd meet different people, I came across a guy named Dr. Elder. Now, Dr. Elder taught trading, and he went, like I was just saying. And, did he really trade? I don't know. I question it. I question most people. And you should be somewhat skeptical. But one thing Dr. Elder did open my eyes to, and here's the thing, you could be a total scammer and teach someone something. They're teaching real things. These are real ideas. It doesn't necessarily mean they're doing it, but they're teaching it, right? And so as I would watch, one of the things that he really taught me and what he was doing, he used a 13-day moving average and really pushed on moving averages. Well, this is a 20. What happens if we change this to a 13? And when I say 13, I mean this is a very simple. If you 1 day, 2 day, 3 day, 4 day, 5 days, 6 day, and we went 20 of these days, and we took the price of each of these and we divided them, we would come up with an average, right? And what you start to notice on a breakout is what? Price breaks out above the average. The average. And as price moves higher and higher and higher, guess what? It's getting further and further and further away from that green line. But I want you to see something. On pretty much every chart out there, if you just put in any ticker, and you just started putting what happens when price goes above it, what happens when price goes below it, and you began to just plot these spots, what you'll notice is whenever price gets really far from the moving average, it gets pulled back. And whenever it goes too low below it, it gets pulled back. And whenever it runs up, it gets pulled back. And whenever it runs down, it gets pulled to it. And this green line becomes like a magnet pulling price back to it. So I know when it rips up, every day it rips and goes higher and higher is one day that it's not going to do that. Meaning that the higher a stock goes, it will come back down. And the lower it goes, it will go back up. And it becomes like this rubber band effect. Meaning if it goes too high, it pulls back. And if it goes too low, it then rips higher. And so as we know that effect, and it becomes just a quill in the quiver, so to speak, it's just one little piece of a part of a bigger puzzle called the money flow. As we begin to look at all of these things and internalize all of these little bits and pieces of repeatable patterns that we see, it begins to help us make sense of the chaos, turn chaos into hopefully cash. And so just like I said that, if you have my Getting Started with Stock Charts class, I go into this in great detail about when you get stocks that pull this far away from the 20-day, that run is almost over. Same to the bottom. When they pull that far away, it doesn't last long. Unless something catastrophic or really, really, really has happened to the company to really fuck things up. That's a different conversation, obviously. And what we know, as it does that, couple things. We have other indicators that point to us that, hey, this has gone too far too fast. And we have a couple. One is support. Meaning, if price has ever been here before, it's pretty likely to catch it again. Again, it's like a web. This is kind of like a web. It pulls price to it. Same thing with support. It stops it. It tries to capture it. Doesn't always last long. And when it breaks through, we have a general rule that we assume it's going to go to the next one. Well, that same thing. Remember I said a stage 3 is a stage 1. Bipolar, the yin and yang of the markets, good and evil. These are the same, man. The only reason it's called a 3 is it just came off an up move, and the only reason it's called a 1 is it just came off a down move, and the up move and the down move are one and the same. The same thing is happening going up is going down. Let that sink in. A stage 2 is a stage 4. And a stage 4 is a stage 2. If we were to flip the chart around, if we flipped it, it would look the same. And all you have to do to see that is go look at an inverse ETF, right? If we were to look at so look at this. Watch what you see here. Has price ever been here before? Yeah. So where did it stop? Right where it stopped before. Now, I wrote that 7 years ago, and it did it on Friday. Or, what was it, Wednesday? How is that possible? because this is a repeatable pattern. A lot of people believe in this. I didn't create it. It just is what it is. And then how does it stop here if it stopped there? I mean, come on, dude. Right? So if the 2 is going to stop where it stopped before, and the 4 is going to stop where it stopped before, come on, man. Look. Man, if that don't blow your mind, something's wrong with you. The 2 and the 4 are the same. They're stages. Prices moving up and prices moving down. We have no idea how high they're going to go or how low they're going to go, but we do have indicators. They're called indicators. Why would it be called an indicator? On account that it indicates. It's letting you know that this is a possibility, much like a yellow light. If you were driving in traffic and you see a yellow light, it's like, hey, a green light or a red light's coming, bro. That's what the indicators are. And they're not 100% certainty. And there's all these other stuff, but you don't need to confuse yourself with all of that. We're trying to do the basics on the Money Flow Sunday service. But we have these other indicators. You see support and resistance, MACD, RSI. These things help us determine if this is a stage 1 or a stage 3. Meaning if the RSI isn't extreme and we're headed up, then I just assume we're going to keep going unless we hit a previous high. And that rule set means, so over here, if price begins to rip and move higher, where do I assume it'll go? Previous high. You know? Let's see. So, a couple people ask, buying books, man, just click the link. You can get to it, follow it. Now, remember I said a lot of this is art and not science. And as you're looking at these previous highs, it's not just this one. You know, a lot of people think that is one, but look over here. This was a previous high, was it not? So what do you think is going to happen when price moves up? It's going to stop there. Here's another little previous high, right? And these are just guideposts. Again, not science, art. Not science, art. And if you look over here on Spotify, you know, price had stopped here, so we got a clear box. You want to start looking for these boxes. When it dropped below it and came back up, and we've talked about that, that's coming back into the box, super powerful. Well, if that effect happens up here, it's super bearish. To break out of the box that was being built, see it? And then come back in it, super bearish, and you see it coming down. Meaning when that effect happens, whether the top or the bottom, I assume the opposite. So get it? If it broke the box here and then came back in, now I assume we're going to rip higher. If we did it the other way, I assume we're going to rip lower. Right? Now you say, well, what do I do with that information? That's up to you. Depends on how you're trading. Depends on what your goals are. My goals aren't your goals. You know, the way that I'm going to interpret data is not the same way you're necessarily going to interpret data. I might see weakness as a good opportunity to build my position. Another person might see weakness as I'm losing money. And so it depends on your point of view. It also depends on your maturity level, your ability to, you know, see the movement of price. You know, you might think a 6 month bear market is a bad thing. I think it's a good thing. Why? Because I need to accumulate. I'm not retiring. I need to accumulate shares, man. I need 1,000 shares of Exxon. That's going to take a lifetime, right? I've got, 70 something stock. I need prices to come down. I need steel stocks to get, to be unfavored, to come down. I need these stage 4s. If I can't get a stage 4, how the fuck do I buy a stage 1? Meaning, how do I buy here if I only want this? And so some people are so short-sighted because your time frame is so small because it's tied up in your ego. You got to show your girlfriend on your phone, look, they're all green. Look how smart I am. And yet the smart guy doesn't want it going. Smart guy wants it down here. But everyone I meet thinks it's cool up here. Food for thought. So as you learn the money flow, it's not about, it can be about, this is fractal. You can do it on a 5-minute chart. And I always get the question, does it work for options? So I know whenever someone asks me that question, I know who shouldn't be trading options. The person that just asked that fucking question. Because obviously it works for options. What do you mean? Does price direction work for options? Hello? Does price direction work for options? So the fact that you're asking that question means you probably shouldn't be trading options. You haven't reached a maturity level yet. You don't know enough. Now you can, if you just like donating your money to other people, cool. Give it away. Just take all your money and just fucking write a check and give it to E-Trade. Don't fucking bother trading and go work at McDonald's. You're going to come out ahead. Most of you make more money at McDonald's than you would trying to trade fucking options. That's just my personal belief. You'd make more money. Because if you'd spend time learning this and not worrying about time decay. See, so as you sit worrying about time decay, you're all fucked up and out of the money flow. You know? That's the problem with that. You're not learning to flow with stocks because you're fighting against time, man. You haven't learned the flow of yet. So once you learn the flow yet, then you can pick your timing a little bit better. And of course, timing works with options, man. That's the only thing that works with options. What else would work? You know, doesn't, right? I mean, what else is going to work? Because you're running against time. So, and stock selection, of course, man. Stock selection, of course. So, this is a beautiful money flow pattern. But back to Dr. Elder, one of the things that I got from Dr. Elder used a 13-day moving average. So let's do this, and let's see if it makes much of a difference. Stage 2 breakout, stage 2 breakout, and we got a stage 2 breakout happening here, okay? So we're going to save that. Now, let's put a 13-day moving. Let's change this to a 13-day moving average. Not much, right? Not much happened. Not much happened. Back to a 20. See, not much. Not much of a difference happened between a 20 and a 13. And you could run computer software and try to find, on a 19, and you could adjust it using past data. It's all fucking, that's all silliness. It's all tied up in ego and percent returns, which I don't believe in at all. And, what is your return, how many winning trades? None of that matters. You could have 9 winning trades in a row and lose money if the 10th one is a massive loss. And so you could have a 90% win rate and lose money. You could have a 90% win rate and lose money. So you could have a 30% win rate and make $1 billion. So your percent rate, that's all marketing bullshit, man, that people use to try to trick you for people who don't understand statistics. So don't get caught up in any of that stuff, man, whatever you do. It don't matter your percent rate. What matters is the wind, That's what matters, man. So as we're looking at this, I use a 20. And you say, why do you use a 20? Because there's 20 trading days in a month. And so what I want to see on a breakout is price higher than the price of the last month. And if it is, then I can conclude we're in a bull market. We're breaking out. It's bullish, right? It's bullish. And it'll stay that way until what? It's not, which is what? When it goes below it, which was over here, right? And so we had a move where we were able to clearly identify. Look at that. Breaks out of the box, back in the box, super bearish. Comes down. Where do I assume it's going to come? Where it stopped before. So we had 2 levels, right around in here and right around in here. And that's the one that it stopped at, right around here. Once that box is put in, which is determined by what? We can't even call a stage unless what? Not 1 day, not 2 days, not 3 days, 4 days. We need 4 days to declare that this is a stage, technically. And then once I have it, I'm looking for a breakout. And you can get down in the weeds as you begin to study the money flow. And we have the other, the 5-day, the 10-day, the 20-day. But honestly, you probably shouldn't. You need to get the 20 first. And these others, what I call minor moving averages, the exponentials, the 5-day, the 10-day, and you can Google what an exponential is versus a simple versus a weighted versus there's all this different stuff you can get. You can go so far down that rabbit hole and get into Elliott wave and Gann fans and, you can get into Fibonacci ratios, and you could just fill your chart full of shit that has nothing that's going to help you. You could just pile it on. You could do all kinds of stuff. You could put all kinds of death crosses on your screen, right? You could add all that stuff. Maybe some of it helps you. I don't know. This is all I know. I watch, and this is what I see happening. And people say, well, if you put the Fibonacci ratio, you expect it to pull back. All right. Or a box. Like it stops dropping, starts to go sideways. I don't care if it was at 0.66 or 0.33 or whatever, it's doing it, And that's what I began to find. Like, it doesn't matter, what was the Fibonacci retracement of this from here to here? Well, it looks like 100%, right? Well, maybe. I don't know where you started drawing your line. Where did you start it? And a lot of that becomes subjective. And that's the problem with like Elliott waves and Wyckoff patterns. Well, when did you start it? I don't know. So if you start talking about cycles and, you see this in Bitcoin with the 4-year cycle and they talk as if that's certain. It's like, bro, it's been around 10 years. Let's don't get too fucking down on the certainty of so there's been 2 of them. Okay. Well, maybe that's going to change. So I don't need to know any of that stuff. What I need to know is where's price in relation to this green line, because if it's below it, it's going down. And if it's above it, it's going up. That I know. That's not subjective. The line is 20 days. So it's 20 of these bars divided, and you can find a price point. You can go read on how they calculate a moving average. None of that is subjective. It's either above it or it's below it, right? And what that helps me do is draw the pattern and determine what stage we're in. 1, 2, 3, 4. And what those stages are going to mean for you and what they do for you is up to you. Depends on the rules that you set for yourself. So if I'm trying to accumulate shares in Exxon, meaning I don't worry about if it goes down, that's not my concern. My concern is accumulating a lot of shares. That's my concern. Then if I was watching this, right, I might create some rules for myself that say, all right, I'm looking to buy after big sell-offs and it starts to go sideways, right? So I could begin to create rules for myself. Let's say I'm trying to swing trade and I come across Twitter and I see it goes down. And then I'm like, well, and I'm what? I'm looking for stage 1s, which means what? I'm looking for boxes, right? In areas of support. And I start to see it on Twitter here. I can see where price has gone sideways. And this price level is holding, right? So if I was drawing the chart of sideways and then what? Up and then what? Sideways and then down. Where are we on this chart? We're like right there, right? So if I'm looking to swing trade, I'm like, we're right there. Or on this side, we're right here, right? And so what are we hoping or expecting is that what? It would break out, right? Which is over here, which means it goes up to the stage 3. So as I'm looking at this Twitter chart, I'm like, all right, let's back it up. Do we see any other boxes or zones where it stopped? Yeah, there's one right there, right? And then obviously up in here, right? Okay, so what does that mean? That gives me some upside targets, right? Now I got to ask myself, is it theoretically possible that the stock could even go there? Well, it's been there before, and we know that price has memory. It's one of the founding principles of the money flow trading system is not only this 20-day moving average, not only the 4 stages of price movement, but this idea that where price has been before, it'll go again to the downside and to the upside. So we just need a reason to believe that Twitter could go higher. Now, easiest way of doing something like that is you can sign up for different services. This is not complicated. Don't overthink it. You've got Zacks, you've got The Street, you've got all kinds of services. TipRanks is one that I like. I pay for the service. TipRanks tends to run a little higher. mean the price will be higher. I subscribe to like $2,000 a year and shit. Morningstar. And as I go through all these different services trying to find what? Basically a true value. I need them to all be higher than what the money flow says. Well, what does the money flow say it's worth? Well, money flow says it's worth 44, and then the money flow says what? That it's worth a possible 66. Well, do I have any fundamental belief that it could possibly go there? Well, if I go look at, and the average, they're saying 66. Well, damn. Now we have a fundamental reason to believe that fundamentally the company is worth at least 54. If the average analyst says 56, let's say they're all dipshits and don't know. Now they know more than me and you. Most of them got MBAs, went to fucking all these colleges. They understand finance and balance sheets and cash flow statements, probably more than I do, probably more than you do. And so we utilize them just like we go to a car mechanic or we call an AC guy or we call a plumber. We want to outsource shit we don't know. And that's one of, if it can save you time. Now, you could sit around reading and learning about cash flow. I see people all the time, they get into trading. Next thing you know, they're reading about Warren Buffett. Next thing you know, they're trying to read some complicated ass book that Warren Buffett recommends. You could do that, or you could just go to Tip Ranks and go with 66, because after you do all your reading and studying, you're still going to come to 66. It's been my experience. What Warren Buffett's doing is he has intuitive ability through all of his reading. He can read 4 to 6 hours a day. I can't do that. So I can't do the edge that he's doing, looking for arbitrations and shit that are often inside of cash flow books. But I can watch and look for stage ones on undervalued stocks that are fundamentally worth more money. And that begins to become an edge for me. Right? And so that's doable for me. That's doable for you too, man. It's pretty cool, right? What do we got on here? 3, 4, man, almost 500 people, man. Not bad. So if you ever come to my newsletter, it's free, thepetersreport.com. It's delayed. I put it out inside our Discord group first. I then text it to everyone and let you know what's up. So if you're at work, get a little bone. Oh, geez, doing this. And then later, next day, sometimes the end of the day, I post it on my trade log on page 4. But if you come to page 9? No, page 10. It basically summarizes the basic overview of the money flow. Now you can there's more, right? In anything, there's nuances to everything, right? But it basically says the money flow and the 4 stages of price movement, that the stock market goes up as much as 71% of the time. Now, people like to quote that back to me after it's gone down. And I don't know if they're trying to convince themselves, trying to convince me, taking a shot at me, I notice I get quoted that a lot when it goes down. And it's true. Market goes up most of the time. That doesn't mean straight up. It just means the general direction of price is to move higher. The problem is it's not a straight line. Price can only do one of 3 things: move up, move down, or move sideways. I believe that price does this in 4 stages. Now, I got the 4 stages concept. There are a lot of people that teach it, but I got it from Stan Weinstein. He used to use it on a weekly chart, and that's just too far out for me. What I discovered is I'm sitting there one day playing blackjack, and it occurred to me it's not happening on a weekly. It's happening on a daily. And I could see it clear as day. Let's, hold on here. Right now, there's someone out there, they're fucking trembling, wanting to give me a ticker symbol. Oh, look at this one. Look at this one. And it doesn't matter, man. Your stocks don't matter. This is for all stocks, dude. All stocks. So I don't need your ticker symbols. It's for all stocks, man. Once you learn this, it applies to all stocks. Now look at this reversal candle. You could dig into that, what these are, but it's a very, 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 very often happens right there at the top. And I don't teach this a lot because as soon as I do, all the other money flow rules go out the window and all people see are these. But these come at almost every top and near every bottom. And it's just one more little queer in the feather of the stages. That was the stage 1, right? Price breaks out and runs, right? What do we got here? Stage 3. Now look, see how it broke above it and came right back down? Super bearish. Remember I was just saying that a minute ago? That means it's usually almost always going down. Am I looking to short this? I'm not. You can. Down we go, stage 4. Do we have a bottom? Yeah. So if you're looking at this stage 1 is happening as it moves sideways. Now I'm more and more suspect of any stage 1 that didn't trigger an RSI, and we haven't even put the RSI on the chart yet, but there's other little indicators that are going to help me here. And so as I back this up, if I said to you, what is this? What is happening right now? You would back it up. You go, okay, well, that was obviously stage 3. This is a stage 4. Obviously, that's a bottom. We've got a box going sideways, and now what's happening? It's attempting a stage 2 breakout, right? Right there. Price is coming out of a box and breaking above the 20. So where would the target be if I was swing trading? Well, right around the previous high, $36, right? So that'd be a, $9 move. That'd be a pretty damn big move. Turns $2,700 into $3,600. That's ENVX. Okay? Now, it hasn't gotten above that right there yet, but right in here was your stage 1 if you were looking to buy. Now, what is this stock worth? ENVX. It's important to know, are we trading a growth stock? Or are we trading a dividend? What kind of stock is it? What kind of rental property is it? So they have a $45 target. It's a strong buy with a 66% upside. Now, this isn't guaranteed. Remember, it could take years to get to this price. What they're saying is, in a perfect world, if everything goes right and everything works, this is what they think it's worth. If you wanted to write a check to buy the whole damn building, this is what you would have to pay. This right here. That doesn't mean the stock market's going to price it at that. And that's what we're trying to figure out every day. Every day as the stock market opens, it's trying to figure out the price for this. And it can misprice it, meaning there's just not enough people to play. Not enough people give a shit about ENVX. And so it could trade undervalue for years. And that's what a guy like Warren Buffett is trying to do. He's trying to find a stock that the market is not paying attention to or has gotten it wrong. And he's willing to sit on it for fucking years until the market gets it right. And he thinks he discovered something through reading and through fundamental analysis that the rest of the market hasn't noticed because it's buying GameStop. And so he's willing to wait and take, that's his advantage. That's what he's trying to do. And so, but as I watch a lot of people trade and do things, what I see is a lot of fucking chaos in their mind. They're trying to be Warren Buffett and, the day trade professor all in one. And you can't do that, man. You got to pick a fucking side. You got to decide who you are and how are you going to interpret data and how are you going to look at the market, and everything else be damned. And so there's times that I run afoul with people in my own group. Why? Because I'm not fucking trading like that. And so I'm going to point it out. I am a defender of the money flow. I don't give a shit about anything else. And if a person is still caught up in other things, then guess what? We're going to clash. That doesn't mean they're right or wrong. It means I'm trying to defend the information that comes into my mind. It doesn't even mean they're wrong. It just means I'm trying to control the flow of information that goes into my head. So you could have someone advocating violence and they could be completely right, but I might not want to participate. And so I have to keep their shit out of my mind. Does that make sense? Doesn't mean they're wrong or bad. You can disagree. So one guy trades this way, another guy trades that way. And maybe that guy's super smart. Okay, but that's not what I'm doing. And so you have to get real clear and define yourself. Otherwise, you lose the straight line. And every little rabbit and every little turn takes you off balance, right? That you get off. You can't do all these things. You can't trade all these styles. So you have to determine who you are, man, what it is you're doing. Is news flow going to rattle you? That has no place in my fucking so I don't care. So I don't care what a YouTuber said or some historical pattern or every time this has happened, it's predicted every great crash. Don't give a fuck. I don't read it, don't want the information, don't care. What I care is where's price in relation to this green line. You understand what happens when you get that kind of power? Guess what? You just get richer and richer and richer because you don't get sidetracked, man. You don't get sidetracked, man. Style drift is the worst. That's what'll kill you. And I see it, man. I watch it all the time. People, they'll be with it for 3 or 4. If it ain't enough action, they start to drift. What do you think about this? And what do you think about that? It's like, fuck, man, you even have mastered this. You can't master everything. You can't master the piano, the tuba, the trumpet, and the violin. Now, a master musician can, but a guy who just started learning the guitar probably should wait a minute, right? If you're going to study, put your time into this. And so that's how I see it. And it's not that I think other people are wrong. Maybe you're right. It's just not what I'm doing. So I try to be very clear about what I'm doing. And the clearer you get, the closer you get to mastery. And the closer you get to mastery, then the more you can begin to interpret other things and figure out how to add them to what you're doing. I hope that makes sense, man. It makes me sad because I see a lot of good people get caught in that. Now, look at this. Remember I said previous highs, where price has been before, right? Got caught up a little bit in there, and then what? That's exactly where it stopped. So when I see a stage 4 sell-off, I'm looking for it, what? To stop where it stopped before. If I just draw a line out, has that ever happened here before? Whoa. Yeah. See what I'm saying? So now this zone becomes, okay, maybe this is legit. Now what do I need to do? I need some sideways bars, right? And then what? And we haven't even put this on here, but I need price to move above the 5-day exponential moving average. Let's put that on there real quick. I wasn't going to. Straight line, man. People will get you off track. Usually yourself. Let's see. Now I added the red. Let me dot it. Otherwise it's going to mess with me in the head. Dash. The minors are a dash. So as we were looking over here and we determined this is likely a stage 1, could it fundamentally go higher? Yep, we read that they had a $47 target on it. So are we seeing the money flow pattern taking place? If we look at the pattern just visually, I'm seeing it. Check. All right. Okay. Is price moved above the 5-day? Check. Are the moving averages starting to come together? Remember, sometimes I would use songs and I'd say, hey, go listen to the Beatles song, Come Together. Now go listen to Godsmack's version, Come Together. Now go listen to Aerosmith's version of Come Together. Why? I was just trying to drive home the idea that nothing happens until the moving averages come together. Very, very important. Come together. These zones of where price comes together. Now notice, this is a little bit of a sidetrack. Notice where the 5-day exponential is. On this side of the green line, that means it's bullish. And if it's on this side of the green line, it means it's bearish. And it's going to stay that way until it doesn't. And what does it mean it doesn't? Meaning it puts in as stage 1. So you see how all of this information, I try to give it to people in bits and pieces. If I just drop, here's 6 key points. Inside of each of the 6, there's 3 or 4 or 5 more things that now there's 20-something things you're looking at, and you can become overloaded. And it's like, yeah, because you're trying to learn it all in one fucking day, dude. And it takes time. It takes years, not a quarter. Oh, I want to try trading with you for a quarter. It's not how it works, man. In a fucking quarter, stocks could go down. We could have 90 days of just drifting down, 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 sideways, down, down. And the guy will be like, well, this doesn't work. No, you don't work. It works just fine. This was going long before you were born. It'll be going long after me. It doesn't matter if and here's the weird thing. And someone mentioned this in our Discord group the other day. And I should have harped on it because it's so important. He said, I notice some people are saying their accounts are down. I've never had a higher account balance. And the guy was like, what do you mean? Well, he's running the money flow on different stocks. And so if you've been running the money flow on big cap tech stocks, dividend stocks, it's been killing it. If you've been running the money flow on a growth stock, the moment growth stocks are out of favor, all of your growth stocks are going down. That has nothing to do with the money flow. The money flow is telling you what's happening. It's stage 4 decline, right? So how you interpret that, what you want to do with a stage, do you want to get out? Do you want to hedge? You could do that. And so instead of style drifting, how about master your style? Meaning if you have a style that alerts you to a sell-off, and you're like, well, I'm not a day trader, so I don't necessarily want to be in and out. Maybe I could study options for the sole purpose of putting on puts. So, and I have a separate account, and I put on my puts when I get a sell signal on my position trades. Right? That's not coming off your straight line. That's adding value to your straight line. Right? That's not, oh, I think I'm going to go trade this now. No, that's mastering what you're trading. And so if you're like, okay, well, cool, I'm going to refine my stop loss. I don't like writing a full position down. I know Gerald does that. It fucks with my head. I don't like 50% drops like he does. I can't do that. Okay, now then what the answer isn't to go do something else. The answer is to refine your stop positions and get better at picking a stage 4 so that when this happens on a stage 4, you have a rule, you've cut your position in half. And so as your and so guess what? You're not going to get a text from me on that because I'm not doing that. But that's perfectly within the money flow system. There's your box, your stage 3, boom, it broke. Now what? I'm at half. Well, you got to have rules for, how do you get back in? Because, shit's going to, and look exactly what happened. Look, it came right back. Now, what I do due to whipsaws and this and that, whenever I cut something in half, I'm not getting right back in because that happened. I'm going to give it a day or two. Patience. The more patience you can trade with, man, the better. And since I'm at half position, if it runs anyway, okay, I'm still in it. But if it comes back down, I'm still at half position. And that's exactly what happened, because once this happens, you get a lot of that shit and then it comes back. And so as it drifted down, probably right around in here, I'm looking at what? Putting some back on. Why? Because we know the stock is worth, what did we say? $45, right? And we're only at 27, What else could we look at? So when we're right here looking at this, where's the state of the overall market, right? So we begin to add more and more layers, these other indicators as we master this. That's why I'm saying I read your book, okay? That means you know shit. You read it one time. You don't know anything. This shit takes years of applying it and all the little nuances and where's the 5-day and are they closing in? What stage are we in? Where's the wind, right? What sector are you in? So now we're getting into portfolio management. And a guy asked me once, is this the only book I should ever buy? And it's like, dude, come on, man. Don't be fucking stupid. There's hundreds of books, man. There's hundreds of books on portfolio management and having different positions in different sectors. Like you could spend your whole life inside of the money flow just trying to master this. It's a beautiful thing, man. But the reality is, and there's 504 people on here, most of you will style drift. The chances of you sticking to one strategy through thick and thin, through the good times and the bad, is fucking next to zero. This is why trading has such a high. It's not that trading is is it because trading is so hard? No, it's fucking simple. You click a button. A 4-year-old can trade, buy, sell. It's when to buy and sell, right? It gets a little more involved in that. But it's what kills people is the time and the sector rotation. And all of a sudden, like, you're really into weed stocks. And this is a dilemma of everyone new. They get fixated on one sector as if one sector is going to make you rich. And I don't give a shit about any one sector. It's all the sectors, man. Because oil stocks have been a hot sector. You remember when solar stocks were hot? Right? And you remember when weed stocks were hot? Remember when, it changes, man. Those things change, and that's fine. My point is, though, you want to have exposure in all different kinds of things. And if you're doing buy and hold, it gets different, right? The way you interpret the money flow would get different. I'm looking to buy stage 1s. So look at Amgen. I had a guy ask me, and this is a legit question. He read my book, You Don't Have to Die Broke, and I talk about the dogs of the Dow theory. But then in the money flow, I talk about buying stage 1s, and they're like, geez, should I buy stage 1s or do I buy the dogs of the Dow? I'm confused. And I'm like, man, you're taking in a lot of different information and trying to mash it together. You got to get real clear of what you're doing. So if you're building a buy and hold portfolio and you're just starting, then, and you want to buy those 10, buy the Dow stocks. It don't matter what price they're at, just buy them. Buy them just like it says. Yeah, but some are going to come down. Good. You don't think in the future they're going to come down? You don't think 10 fucking years from now some of those stocks are going to come down, man? But it's all ego. He's trying to, I want to get it at the absolute best price. And so they add all these filters and shit to the thing and make it complicated. And it's like the strategy says very simple. Spread your money over those 5 stocks. Guess what? The next day, 1 or 2 are going to go down. 1 or 2 are going to go up. Now going forward, you can lay the money flow over them. Over them. And you say, well, I don't want to buy that. I'll wait for this. But what if it doesn't come back? What if it goes up for the next 5 months? Then you never got in and you never did the strategy. So, but this is kind of how our brains work. Like we're handed something and immediately we want to fucking change it. And I watch this happen a lot, man. So if I have the money flow going and Amgen was one of those stocks, what am I doing? Well, I don't want to buy over here, right? It's in a sell-off. What am I looking to buy? Stage 1s. There's quite a few of them over in here. Oh, that might have been one. Now, what am I doing here, though? This is a dividend stock, right? Now, I don't necessarily hit all of them, but these were buyable. Here, 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 here. Now, let me ask you something. This is a 5-month window. So when I told the guy in his dividend, yeah, you could buy, that's a stage 1, that's stage 1, that's stage 1, that's a stage 1. And when we say stage 1s, what do we mean? Price comes down, starts to go sideways. Well, when we get down to this one, he's like, fuck these stage 1s, dude. All we've done is go down. I know. Right now, that's the case. Then what happens? There's another one. Now what? We're starting to go up. Now, when this thing gets up in here in the 270, 280, he don't even remember about all this problem, right? Because now he's like, damn, I knew I should have bought more. And that's how it works, man. As this goes through, what do they think Amgen's worth? AMGN. Only 230. Only 230. So if you remember, I started to take down some Amgen. Why? We had run up. Let me put these other indicators on here so you can see why. And I had a buddy hit me up and go, dude, I'm basically even on the stock. And I said, I know. But things have changed with the stock. It's not that valuable anymore. They've brought down the price targets. So guess what? Does that mean I'm going to sell it out of my buy and hold? Nope. I'm not selling it, but I don't think it's, let's put this above. Now what happened? Now, we know this indicator tells us when price tends to have gone up too fast, and we know the indicator tells us when price has gone down too low, right? And you say, well, how can you know that? Well, let's just put it on it goes red when it's gone too low, and that's below 30, and you can get into all that. And it goes green when it's above 70. Now, if we just put that on there blindly, what are you seeing? There you go. If I'm swing trading, this means one thing to me. This is a completed swing trade, meaning I don't need to be looking to swing trade this anymore. It went from an extreme low to an extreme high. It's probably out of the swing trading game for a minute, right? So when I see this and I'm a swing trader and I see a stage 1, there's price above. There's the breakout, right? Price is above the 20. Where's my first target? Where price has been before, right? So right there, bang, I start selling some. Well, guess what? Now I got to sell some on the RSI, right? Bang. So what am I doing? I'm getting out of this swing trade. But you say, if it's in my buy and hold, what do I do? Well, you don't have to do anything. But here's the reason I began to downsize this stock. I'm not against it. I like it. I'm going to hold some. But when I do fundamental research, the people that I outsource to say the stock is only worth 230. Where's it at? 224. Like that's nothing on this stock. It hit true value. So I need to take it down. And you say, but what if I'm break even? Well, I would still take it down. Meaning, guess what? In your buy and hold, you can get a stock that doesn't do well. Like I had Ford and it was $17. It went all the way to $4 and then it went back to $22. And so guess what? As this comes down, as new information comes in, as new drugs come out, this number is constantly being reevaluated based on sales each quarter. So every quarter, these analysts begin to make different predictions, and if more of them begin to say, hey, wait, we think this company's doing better or worth more, you're going to see this number start to tick up, right? Well, by the time that happens, this will probably have come down, I don't know, maybe in the 215 range, maybe down in 205. So watch. It would have went sideways. It would have ran up. This is so important. It would have went side. I wish I was in this class. I wish someone would have told me this. And it comes down. Now, when it comes back down here, that's a different conversation, right? That's a 10% drop off of what? There's only 2% upside, so that's 12%. But what if this is revised to a 255? Now, a stock that I was trimming at break even that has now come down into a stage 4, setting up in a new stage 1, that's now a buy. That may be 5 months from now. And I'll put new money that I put in a buy and hold in 5 months from now to be looking to start loading this back up again. That's called portfolio management. Here's what the new guy does. But I break even. And I'm like, the stock market doesn't give a fuck. It doesn't care where you bought it, man. If you make decisions based on where you bought a stock, you must understand the rest of the world does not give a shit. And so it doesn't have any bearing on it. Where you bought a stock doesn't mean what the value of a stock is. It is only valuable and it only matters to you. Nobody else. And the problem is you can't move the market. So you have to find what does everyone else think it's worth. And that'll help you make your decision. And this, I'm telling you, this is so hard for people. So let's say this is the stock of Wish, and I'm just making that up. And it breaks out, and it runs up, and it hits an extreme, and obviously starts to go sideways, starts putting in a stage 3. What would be the rules? Well, if you were up 50%, you'd be selling, right? Why? It's a stage 3. But because a guy's negative, he's now interpreting the stage 3 differently. Now, if he would have caught the bottom and it's running up, he knows damn well he'd be taking profits. But because he didn't, because of where he bought it, he now begins to interpret the money flow differently. Now, we could just set it on that. Most people, that would take you all day to fucking comprehend. You walk around scratching your head thinking about that. I would highly advise you to do that. Oh, man. I hate other styles of trading. Just so you know. Some of my best friends trade other ways, and I love them as people, and I hate the way they fucking trade. Hate it. Fucking despise it. And you say, how could you do that? I fucking hate it. I feel like they're wasting their life. Why are you doing that, dude? I hate it. I hate other trading. It brings out a repulsion in me. But I love them. And we have a common passion for the same concept. You get what I mean? We can both love beer and not like the same beer. Maybe I like Coors and you like Stella. We both like beer. I just hate your beer. You get what I'm saying? And hate is a good word because it brings out it's an action word. I hate your style of trading. And so if I hate it, then I don't have any possibility of being lured to it. Make sense? And so I try to hate other ways of trading. I hate them. And it keeps me from drifting and doing it. And if you're going to get me to drift, it's going to be very, 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 very difficult. It's really going to take a while. And it should be like that. You shouldn't change your philosophy and your way you're doing things just willy-nilly because of one video or one thing. It should be like Congress. It should be very difficult. You should have thought on it, lost sleep on it, maybe lost a friend or two over it. Like before you change your mind on some fundamental beliefs, you should really go through a real drag out, mental dragging process. I really believe that. Unfortunately, that's not the way it tends to go. I wish it was, though. Let's see. It's so nice doing a live without bots. Gerald D said, how do I know it's the bottom and it keeps dropping or dipping? You better learn your indicators in the stages. That's what we're talking about. You got to clearly be able to identify as stage 1. So let's see. Identifying bottoms or look at, let's go back to Spotify. I got a little off track. I try to let the spirit just take me on these things. Bottoms look the same, sir. And nobody knows the bottom, but you can catch all the bottoms. And you say, what do you mean? Well, your RSI is going to go extreme, but it might do it 2 or 3 times. Like that looked like the bottom, right? But this effect here, you need to understand. You see the move? Look how far apart they are. It can't go up until they cross. So if you put that in your brain, that didn't happen till over here. Or they even look like they're about to cross? No. Does that even look like it's about to cross here? No. So you just keep waiting, man. Boom. Now, could they possibly cross now? Yep. And look where that was. Pretty near where the RSI first started going extreme, right? So you're really looking for that RSI extreme, price to go sideways and price to break above that 5-day moving average with the idea and concept that nothing can happen. Look, see how they had to come together? Nothing can happen on the up or down until they come together. So is this your bottom? Highly doubt it. Why? Look how far away the moving averages are. And so as they get closer and closer, it becomes more possible that that is the bottom, and then you see it right there. And so you could have bought that one, that one, that one, and I wouldn't have bought that one, but I would have bought that one, right? And where's our target? Right here. And so as you systematize that so it's the same every time, it gets much easier. Because then if you do miss if it goes down again, you know what to do, man. You know what to do on the next one. Is it safe to use RSI, oversold RSI indicator to find the new bottom? No. You better buy the damn book, son. God damn, we just went through that. Fuck it. All right. No. Just an extreme RSI isn't enough. We just talked about it. You've got to be able to identify the stage. The stage takes what? 4 candles, a minimum of 4 days. Minimum. That's a week of trading. So when I see a guy calling the bottom, now you could have, every once in a while, I'll call an audible. And I'll just text, well, that's not the rule. I know, but I've been trading a very long time. And this is an extreme low or an extreme high. And I'm going to just take a shot that it's the bottom. If you do that a lot, if that's your common go-to, you will be a fucking horrible trader. So that needs to, again, it needs to be very rare that you do that. Because it's you don't rarely get extreme lows and extreme highs. You don't rarely get them. It's super extreme. I'm talking about market meltdown. Like they're freaking out on CNBC. That's when you're calling an audible, not just because of a stock, right? So look at that look how easy that bottom formed, and then price started going sideways. Price broke above the 5. Like there's your box. That's the bottom, man. Super simple. But it takes practice doing that too, man. Best stock pick for 2020, Patrick, that is a dumb fucking question. Don't ask stupid questions like that, bro. That implies that I have a crystal ball and I'm some sort of dancing fucking monkey and I can tell what's going to happen in the future. The fact that you even asked that tells me you don't understand stocks. Nobody fucking knows that. Because they don't know what's going to happen on Monday, or Russia invades the Crimea, or fucking North Korea decides to, or there's a fucking virus. Nobody knows, man, what's the best stock for 2022. Stop that shit. Stop asking those kind of questions. They're stupid questions. You should be looking for quality stocks every day, all the time. And nobody, any article you see that says these are the top stocks of bullshit. All bullshit. They can't possibly know that. All bullshit. Those are all articles to try to sell you shit. And you watch, my friends, some of my good friends will do this. They'll put out videos because all I got to do to get a bunch of views is top 5 stocks for 2022. And all you guys will click on it and read it. And it's all clickbait bullshit because I can't possibly know that. So how about that? How about the fucking truth? That's something that people don't like. The fucking truth. So when my friends put that in, they don't know what the fuck they're talking about. Yet I'm still friends with them. Let's see. Uh, you need to learn proper stop placement. There is no such thing. You need to be clear on what you're doing as a trader and then worry about stop placement. So you need to get real clear. Are you swing trading? Are you day trading? Or you're position trading? Because if you ain't clear on that, the stop don't matter, man. So you need to get real clear on the kind of trader you are first, and then the stop placement will become easy. Oh, somebody asked about a ticker, bro. I don't give a shit about your stock. Really don't. Let's see. The best technique to use trading cash and boom. No idea what that means. Here's another dumb question. Best technique to use in trading crash and boom. I have no idea. Boom, boom. You buy now, you go. I have no idea what that means, bro. Let's see. The distance between a stage 1 and 3. Should there be a value only, and which should we trade? Again, no idea what that means. Nobody knows how far a stage 2 is going to go up or a stage 3 is going to go down. Price goes to where it was before, man. So there's your thing. So this move up here, I fully anticipate will go to the next previous high. Now, if you are a simple-minded person, you're going to say, oh, well, this is the next previous high. And that's because you didn't buy my course on stock. No, this is. Okay? This is the next high. And actually, there's one before that right here. Okay? So you're probably going to have here and then here on the way up here. But if you're a simpleton and you don't really study the material, put a lot of time in, you're going to think it's 300. Okay? That's how I know you don't have my course. Let's see. Hey, Full Auto, are you doing classes every Sunday? Yeah, bro. I've been doing them every Sunday for 2 years. I'm glad you could finally join us. Now, you won't be here every day, but I will. How do you find which stocks you want? Now, here's a good question. Here's a good question. How do you find which stocks you want to analyze in the charts? Screeners, breaking ETFs? Yeah, that's one way. You could do that. That's what a lot of new people like to do. Here's another idea, sir. You could follow the fucking stock market. That's an idea. Get this fuck out of here. You could follow the stock market every day. You know, put in work. Just like in football. How do you know who's the best quarterback? Watch football. Study CNB, ESPN. Look at stats. And so you watch, right? And yeah, you should. You should go look at the spider ETFs. There's the financial ETF. There's the oil ETF. There's the industrial. And you should learn what the top 10, 20 stocks. Yeah, guess what? That's 110 stocks. There are 11 sectors of the S&P 500. They all have a top 10 weighting. And if you went through each one, pretty soon, just pick the top 5. You'd know whenever industrial stocks get hot, you know what the top 5 stocks to go to. Whenever tech stocks get hot, you know what the top 5 stocks to go to. And as you begin to watch the stock market every day and look at 100 fucking charts every day, guess what? You're in the flow, and you know. So you just got to practice getting in the flow, man. That's what you got to do. Spend more time trying to be in the flow and less time trying to pick stocks, and the stocks will pick you. I believe that. Somebody took their question down. Now the dumb question, they're taking them down. When is your new book, Bread and Butter, coming out? It's coming out soon, man. Does the exponential moving average... Let's pull that up. I got a new book coming out. Does the exponential moving average make a difference versus using a simple? Yes. The 20 days is simple. 5 days exponential. Why? 5 days the trigger. You need the trigger to be a hair trigger. And so exponentials react faster. This is just a sample of a month of trading. And that's 1 week price crossing the average price of the last month. That's a very bullish sign. That's what that means. Good question, sir. You get a sticker. Let's see. What does a MACD do? That come on, man. Can you break down chart lines, moving averages, and what? All right, motherfucker. That's the whole class we just did. Let's see. Not one of our questions has been answered because you're all asking stupid questions. Let's see. The distance between, I just answered all of those questions if you paid attention. The distance between stage 1 and 3. Should there be a value only above which we should, I have no idea what that means. What is stage, is SoFi in? Let's see. So based on what we just talked about, we'll pull this one up. I won't have a freak out. Let's see. If we just visually look at this, this is a good one. Good question, sir. Now, I want you to see something. If I just, again, it's easier to teach 4-year-olds or 4th graders to trade than adults. If I said to you, let's find the lowest low point, which would be over here, right? And then the highest high point, and then the lowest low point, which was right here. And then I said to you, connect, what the hell just happened? And I said, connect them with a line. Right, now I got a 4th grader trading. And I said to him, what this is going to help you determine is that's a stage 4 and that's a stage 2. And what they're going to do is price has memory. So wherever price has been before, it's going to tend to stop again. And you notice that happen all the way down, right? See that? But remember what I was saying. There's a lot of nuances. Not as simple as the green line, man. Right? What? Look how far apart these moving averages are. Price cannot go up until these moving averages come together and cross. So that is not going up. This is not going up until these things come together, man. Come together like the Beatles. What do you see right here? And so it's very common in a big drop. Do not trust these early stage ones. Price has to come together. Now, we didn't even get into the other little nuances that are going to help us. This is why I say this takes too long. I mean, we could do this for days trying to get all the little parts. But over here, the MACD, as long as this histogram is pointing down, bullshit, none of that is going up, man, until this histogram starts to go the other way, which what? Started in here. Once you get how to use the histogram in conjunction with the TSI, in conjunction with the stochastics, in conjunction with the 3 moving averages, and them coming together in the boxes and the stage, oh my. Oh my. Oh my. Don't try to simplify it down to one little thing. Oh my. Man, I wish I was in this class. What do you think of SFT? Nobody gives a shit, sir, about your stock. Sorry, mate, I joined late. I know, you're late. You're always late. It's New Year, you're already fucking up. How do you calculate the green line on your chart? It's the 20-day simple moving average. How much time to give stage 1 to last? Or do you buy the breakouts to stage 2 only? Either or, sir. You got to define what you're doing. So SoFi is a stage 2 breakout. And in my book, I mostly talk about breakouts. So you buy, right? Your stop would be somewhere down in here. And as long as that stop holds, this stays a buy. If price gets above this, then price has gone too far. That'd be it. Now, if you're a position trader, hold on. If you're a position trader, then you're going to trade stage 1s mostly, not so much stage 2s. You got to define what kind of trader you are. Let's see. Here's a good question. What is the percentage you should hold on stock in your buy and hold account and portfolio manager? Depends on the number of stocks you want to hold. If you want to hold 10 stocks, I would not get more than 10% in any one stock. I tend to hold a lot of stocks, so my percentage comes down. I hold a lot of stocks in my buy and hold. Depends on the number. I don't think you should run off and get 70 stocks. Sometimes I see people do that. I like the dogs of the Dow because it limits you to 5 or 10, and we can begin to learn before we run off and buy all these stocks that you just ultimately become overloaded in. You don't have any conviction. You end up selling them. So start with, if you got 10 stocks, 10% each position tends to be the max for me. And how would I scale that back as the money flow plays out? So if it runs up real high, I might trim a little, you know. You don't have to, but that's how I would manage it. What are your thoughts on CRISP? CRSP, same as all the other growth stocks, sir. What do I think of Shiba? All right, thanks for coming on and wasting my time. Do you use... That's what I think of Shiba, sir. Like, you get a chance to ask me a question, and that's your question. Thank you. Do you use stochastics as an indicator? Yes. Only use the pull outs, though. He asked me about the stochastics indicator. I'm only concerned with one thing. This. Now, I've had people go, well, that response is kind of mean, Gerald. Why would you say that about? Because if you'd have started with Bitcoin first and you're buying just Bitcoin and not being a complete dumbass like I see people doing, buying all these other coins you don't know anything about and you still don't own any Bitcoin, then you wouldn't even ask that question because you know all about Shiba because you've been in a Bitcoin. So whenever I get asked that question, that usually means it's a person that doesn't understand crypto and they're not in Bitcoin anyway. So you should start with Bitcoin. That's your answer. Do you have any suggestions for figuring out what kind of trader you want to be? That's a good question. I think you got to ask yourself, one, is the time frame in your life? If you have a full-time job, sir, how the fuck could you be a day trader? So take that off there. 'Cause you're just going to be shitty at your job. You're going to be checking your phone all the time, which means you're stealing from your employer. Right? So now you're living in conflict there. So I think as you begin to look at your life will dictate. So early on, I was a day trader. And then I had kids. I couldn't do that anymore. I just couldn't watch everything I needed to watch at the same time deal with kids. I just couldn't. And in my business, my real estate, I wanted to do real estate. So my life began to dictate. And that's how I got into swing trading, is as my life dictated. So, you know. So I think your life will dictate. Also, how much money do you have? You know, if you're not sitting on like $250,000, I don't think you're going to be a very good day trader. Does this apply for crypto too? Of course. We already did the bottom. Wow. Actually, not bad questions. Yeah, all I care about on stochastics is the breakout and the breakdown. Once you're in there, that's fine. It can stay sideways or stay extreme for a long period of time, just so you know. As far as screening for stocks, I would highly advise you to trade stocks you already know or understand. Like, don't get complicated about it. You're using an iPhone, okay? So simple as that. Like if you come over here and you were to put in Apple, you're like, can we look at the stages on Apple? Of course you can. You know, like there you go. You're looking at the stages on Apple. Let's see. You know, breakouts, price moving from after a stage 4 decline starts to go sideways, starts to break out above the, 20-day moving average. But getting real clear on the type of trader you're going to be is huge, man. Can you tell us why you opt for a 6-minute chart over a 1 year? Nobody uses a 6 month. Oh, because it don't fucking matter. Why you need to go back? All you're looking at on the money flow is this, man. So my man on YouTube is asking why over a 1 year or 6 month? Because this pattern is probably taking place over 3 or 4 or 5 years. So, I mean, we could sit here and run it back. We could run it back for 10 fucking years. I just don't know how that helps you going forward. There you go. So now we got a longer chart. What are you seeing? Money flow patterns just playing out, man. But it also makes it hard for me to show on the screen what we're doing. So if I can bring the chart in, it helps. What do you think of Penn Gaming? I like it. I'm happy to answer any silly questions. Really, sir? I don't even know who the fuck you are, so how are you going to answer questions for me? Let's see. Let's see. Apparently he's Apparently we're good buddies. Let's see. Yeah, it's not about right and wrong. Not liking other. I don't like other trading styles. I don't like other trading styles because they get me off track. And there's still people out there that think there's a best way or there's a way that always works. I got all that shit out of my system a long time ago. Like I lost $70,000 in like 7 years of my life trading different things and chasing this and that and doing that. I got all that shit out of my. I don't chase anything anymore. Don't actually give a fuck. I know the money flow works. I just gotta wait it. It catches up. I need to own lots of different things. I need to own bonds and Bitcoin and crypto and Ethereum and maybe even some Shiba. Put the Shiba on the chart. A guy says, "What do you think of Shiba?" I don't know. What stage is it in? If it's in a stage 1 going sideways, looks like it's about to break out, I love it. Right? And so that's how I would approach all of that, man. It don't matter what GameStop, same thing, man. Look at GameStop. Like you just put it on here and you can trade the money flow. Look, GameStop's in a stage 1, man. Look at that. Look what happened last time it was in a stage 1, right? Over here. Didn't hold long, but big move out of it. Why we don't need to look at Uber. Let's see. Hey GP, I sometimes notice that a stock formed the box at the bottom and the histogram is below the zero line. Is that fair to say it's forming a possible stage 1? Yes. That's what it is. Price starts to move sideways. That's it. You're waiting for that histogram to start to tick the other way. Oh, Celestian says he's deeply studied my content. Okay, maybe you can answer their questions. If you have, that is good. Let's see. If the RSI is under 30, but there's no box, yeah, I mean, you don't have to, Caesar. I mean, if you buy and hold, you could probably take a shot at it. I'm teaching the core of the money flow. And we can't call a stage until we have at least a week of data, every once in a while, will you have one that just drops down and then immediately shoots back up? Yes. But the money flow will catch that when the stage 2 breakout happens. The breakout is the real buy signal. So don't fear missing a stage 1. If it's going to break, you'll catch it on the breakout. But usually that'll pull back into the box. Wait for a second. Boot camp. Let's see. Yeah, I like that boot camp class that I did. The video filming on it's not the best, but the content's pretty good. It was done in real time, so we, at the time that I recorded that boot camp, we were trading real stocks in real time. Begin to create lists for yourself, stocks that you can follow. You want to follow 10, 20, 30 big ones because whatever they're doing, it kind of tells you what the rest of the market's doing. Stock picks won't be your problem at first, in my opinion. People fixate on stock picks, but stock picks isn't your problem. Usually. Let's see. I don't know about. I need to do a boot camp, but they're very time consuming, man. They're very time consuming. Let's see. Do you normally trade an equal block of shares in order to trim and price target? Yeah, you want to try to buy in groups of 3, is how I like to say it. And what I mean by that, let's say you can only. In other words, I want to be able to, and I'm just using this as an example. Ideally, I'd like to be able to nibble on stage 1, buy the breakout, and then start to sell at a previous high, and then sell into the RSI extreme, and then close it out over here. So in a perfect world, I'd be buying a couple times, selling out a couple times, and that's how the trade would go. So as I buy share count, I want to be able to look. So in other words, don't buy one share. I would want to buy in increments of 3 so that I could, sell a third or sell a, And the more money you have, the less shares you probably should sell when you're shaving because you have the luxury of waiting. Hope that makes sense. Somebody said the boot camp's 1,000% worth it. Appreciate that. LXC ready to go. Let's see. No, XLC. We'll look at one. I like people on YouTube. Ooh. Yeah, it was. Got banged on Friday. Still bullish. Ooh. What is this? Communication service. Oh, XLC? Is that what you said? So this is a weird ETF. This is the communication sector. I don't like it because it has Facebook and AT&T in it, which is to me is very weird. But that's what it is. And as you notice, when that ripped up, AT&T ripped up, right? Verizon ripped up. These are all part of the same set ETF. So they look the same. Yeah, it's still above the 20. I think you're good on that. Still bullish. Still bullish, sir. Good question. He says, do you study he took his question down. Do you study microeconomics, inflation, GDP? If so, do you change your portfolio based on your results? No. God damn, I can't think of something dumber to do. No, I would not. I'm not Ray Dalio. I'm not running $1 billion hedge fund. I don't need to go on TV and sound smart and talk about shit that's probably not going to happen. Problem with all of that is it assumes you're right. And I just don't think that people know what's going to happen because I watch very rich, smart, successful people be completely fucking wrong every day. So no, I don't do that at all. I've watched people not buy real estate for 5 years because the top is in. Just want to thank you for your help. You're more than welcome. Your podcast back from the day I think you were somewhat against Bitcoin. I was, Michael. Crypto maybe as a whole. Your opinion has clearly changed, and I was hoping to find out what changed your mind. Just research and study, man. Sometimes you got to change your mind. And that shouldn't be easily done. You know, it should be difficult to change your mind. If you were to start, I hate these questions, 10K today, how would you allocate your money between buy and hold and swing trading? I would just put it in buy and hold and go get some more money, sir. You don't have enough money, man. Go get some more money. If you only have 10K, you have 10K. I would be focused on getting more money. You don't need to be trading. You need to be making money. If you were to start all over, where would be the top 3 things you know that would help you start over and be much more efficient? I would save 50% of my income, work the 8th day, and stack cash. I mean, I would just do the same thing I've done, man. I would just work more, stack cash. I mean, no, I personally use the ADX, but it seemed to confuse people, so I took it off my charts. My man says, on a swing trade, can you set an order to sell some? Yeah, it's called a limit order, bro. And that's something that you should study is the different types of orders. Stop loss orders, limit orders, market on feel. Like there's all different kinds of orders. You should learn those different types of orders. Don't let that fuck you up. Do you wait for price to double tap on your support before being convinced it'll break out? No. I wait for a box. I'm Indian. How can you help me share market? Now, when you say you're Indian, are you like a native Indian or you're from India? Does the app also work in India? I have no fucking clue, sir. Can you use this on a smaller time frame? Yes. If you want to lose all of your money, you can drop down to a 5-minute chart and do it there too. Hi from Australia. New to your channel. What are your thoughts on... All right, since he's new, I'm going to be real nice, so maybe he'll follow me. BRD. That must be a BRD, sir? That sounds like an Australian stock. I have no idea. Is there an American ticker equivalent? Let's see. Here's a good question. Is there any positions you never decide to trim? Yeah, BX is one that I stopped trimming about 3 years ago, and I've done nothing, and it's now up 400 and something percent, and 2 times larger than any other position in my portfolio. I haven't trimmed any Uber. I just continue to accelerate and buy more on stage ones. Somebody asked me where Uber is. Don't worry about where Uber is. It's going to $60. Just keep your shares. But if you must know, it's in a stage 2 past a buy zone. So let's see. I love DeFi and own more Ethereum and Bitcoin. Do you hold Ethereum as well? Yes, I do. I do think DeFi is fixing to have some regulations come down, though. Nothing. I mean, you know, the Bitcoin versus more Bitcoin. I don't know. Ethereum ain't going up if Bitcoin doesn't go up. So Bitcoin's still the big gorilla, man. But yes, I hold Ethereum as well. But I hold 3 times more Bitcoin. He says, why is it weird for Facebook and AT&T to both be in the same sector? Because I don't think they're the same kind of business. Let's see. The other thing I hate about that question, if you only had $10,000, is because you're not going to have just 10. Tomorrow you should have $10,005. You get what I mean there? Let's check it on oil. And then the next day you should have $10,133. Best advice for small accounts. Get more money. Now I say that and people laugh. I mean it though, man. Stop fucking hanging out with your girlfriend and wasting all your fucking money and get more money and put it in your trading account. Learn to maximize your taxes. Learn to save your money. Like, care that you don't have more money. Like, care that you don't. Like, get fucking pissed about that. Like, you should wake up every day pissed that you don't have more money. I mean pissed. Like, punch yourself in the face, man. Pissed that you don't have more money to put in your account, man. Fuck, dude. Everyone that you meet, you should look at them and go, you know what? I don't have enough money to put in my account. I don't even know why I'm talking to you. Like, get pissed about it, dude. Like, at yourself. Get mad. Get mad at your parents for not having enough money for you to put more money in your account. GP, you say price has memory. You tend to look at 6-month time frame. How far back can... Yeah, it needs to be within reason, man. You know, don't take it... Don't complicate it. I mean, if you go far enough back, you're going to find what you're looking for, but I'm just trying to do it within the front 6 months usually. I think that's about it, man. Appreciate you guys. Don't need to look at stocks, man. Go look at the big 6. Go see where you got my book as a gift. That's very kind. You have a loving spouse. Now, you guys that have spouses that didn't buy you my book as a gift, you might want to look at them twice. Do you outperform the S? Here we go with these questions. Do you outperform the S&P every year? No, sir. No one does it every year. Well, then why don't I just buy index funds, Gerald? Because I don't want to be average. You be average. I don't want to be. I'm trying to get rich. Let's see. I hate that question. And that was my brother. Let's see. Oh, your brother bought you the gift. You got a cool brother. I do buy some index funds. There's nothing wrong with owning index funds. I know this. You will not get rich buying index funds. For fucking certain. You don't know anybody that got rich buying index funds. Elon Musk didn't get rich buying index funds. There's nobody you know, Gandhi, Martin Luther King, nobody got rich buying index funds. You don't know one single person that got rich buying index funds. You might know some guys that lived super fucking frugal, put all their money into an index fund because they were engineers or some high-paying job. But if you drive for Walmart and put your money into an index fund, you're just going to fucking retire with a little bit of money. That's what's going to happen. I'm going to email you. I need some advice. Well, I probably will not email you back, sir. Why don't you play old Forex? Because Forex is for suckers and people that lose their money? Let's see. Hold on just a second. Yeah, don't do Forex, dude. You're just going to lose all your damn money. CHPT, it's a growth stock. They're all growth stocks. They're all shitty right now. Let's see. We'll close with that one. Don't do Forex, man. You're just going to lose all your money. Yeah, bro. Look, this is a perfect money flow pattern. Look at that. Price stopped right where it stopped before. So if I don't know anything about this stock, that's the first thing I'm going to check. Does it 10? Now, I also want you to see this. Look at that doji right there. That happens so much at tops and bottoms that it's sick, man. So can we see the stages? So people ask, why don't you go further back and further back? You don't need to. Stage 1, stage 2, stage 3, stage 4. Now what? Stage 1. Now, do we know for a fact that this is the stage 1? No, we don't. Maybe it goes into another one. But notice where the moving averages are. They're coming together. Was this a good buying spot? No. Look how far apart these moving averages are. It says, GP, how much money do I need to start investing? I make $100K a year. Well, you actually make more than that, but you're just rounding it a year. But I want to start with 10K and go from there. Well, first thing I'm going to ask you, are you talking trading or investing? Because again, people start to mix these together. They're not the same thing. If you're talking investing, why don't you just invest all of it, sir? Like, just invest all your money. How much do you want to invest comes down to how rich you want to get, man. I try to invest all my money and live on the scraps, which means sometimes I'm not a popular guy at home. And you say, what do you mean? Meaning the reason I work is to get money to buy investments. Most people work to pay bills. I work to buy real estate, and then I try to pay bills. But the bills get in the way of the real estate. Does that make sense? So I like to change it up in my mind. The reason I'm working is not to pay bills and get through the day. The reason I'm working is to get rich. I want to buy real estate. That's why I work. You begin to make that switch. It's just a little switch, man. The world begins to change for you. Opportunities come your way that weren't there before. Because if your goal is just to get through the month and save a little bit, then guess what you're going to get? You're going to get through the month and you're going to save a little bit. If your goal becomes to 10x, 20x, I want to own 10 properties, 20 properties, I want to own 70, 100 stocks. Well, guess what? You need money. And that begins to change the way you see things and the way you see life, man. What do you work with? Oh, brother. Appreciate it. Thoughts. Michael says, FAMA. What is FAMA? I don't think I ever heard of this one. Nice. Oh, I hate the chart, bro. This is a shitty 22-cent penny stock. I can't get behind it, bro. The chart even looks ugly. It is kind of a money flow pattern, but you see what happens whenever it rips, it comes right back. I don't like it, man. I have no interest in a 22-cent stock, man. I just can't get behind it. I think you'll lose all your money. I just can't. I mean, stocks under $5 are dangerous enough. When you get into like 10-cent, 20-cent stocks, Jesus, man. I mean, I guess you could look at it like a lottery ticket. I think that's about it, man. We did good, man. Somebody asked me about LZ. I think I was just looking at that one. Let me look at that one. I appreciate you guys, man. Oof, oof, oof. Growth stock stage 1, man. I don't know anything about it. I think this is the one I was looking at. LZ, what is it worth? They got a $30 target on this bitch. Rank rate 80. Oh, LegalZoom. Yeah. I like this. I like LegalZoom, man. There's a bunch of these right now that are just dirt cheap, man. Damn. That LegalZoom is one of them. So, I mean, if we're looking at LegalZoom, where's our target? If we're swing trading it, but dude, this is like almost an investment level, buy and hold level. Just buy these stage ones. I mean, I would have called this a buyable stage one. This is a good example where the stage one went into another stage one. But at least on this one, you're seeing the moving averages start to come together in here. This one's not getting me. Look how far apart they are. But they're starting to come together over here. That would have gotten me. And then it comes down to another one. All right. So if ultimately we get to here, which we know they say it's worth what? Whoa. What'd they say it was worth? $30? Which is still below where the money flow says it would go. I mean, this buy here is not even going to be a worry to you once it starts to run. So as long as you got a good fundamental stock, I don't mind nibbling on a stage one. It doesn't hold. I'm not looking to get stopped out on a stage one. I'll nibble a little more. If I put a big position on the breakout and it pulls back, I might downsize that. But my stage ones are usually just nibbles. Like I just want to nibble. If I'm in it already, it lets me bring down my price point a little. Next one, I can be patient. I still got more powder. What I'm really looking for is solid sideways and a good break. Then I want to pile it on if I can. Now, maybe you've nibbled and nibbled and nibbled and nibbled, and there really isn't any more to pile on. At that point, you're just waiting for the break. How many pages are in book, anyone? Why does that matter, Ashley? I mean, if it's 300 pages, read it. If it's 10 pages, read it. 157. Bam. There you go. I knew that answer, though. Yeah, man, I appreciate you guys. You guys be good. I hope you enjoyed the Sunday service. I'm fixing to I'm doing some YouTube videos on real estate here in the French Quarter. Hopefully I'll have it out here on YouTube in here the next hour or two. And I'll probably drop it on Instagram too. You guys be good, man.